Welcome to Hong Kong Brief. The content of the briefing includes: Wanda proposes extending payment on a dollar bond by 11 months. China guides banks to cap early 2024 loans, shift some forward. Hong Kong stocks jump as yuan hits 4-month high, Baidu to aid earnings outlook. Hong Kong Japanese restaurants lose patrons as they jet to the country on holiday. Chinese law firms on the rise due to slowing economy and geopolitics. Wanda proposes extending payment on a dollar bond by 11 months. Bloomberg. Dalian Wanda Group's unit, Wanda Properties International Company, has proposed extending the maturity date of a dollar bond by 11 months to December 29, 2024. The company is also inviting bondholders to agree on other amendments to the terms, including adding mandatory partial redemptions of the security in January, May, and September 2024. A bondholder meeting will be held on December 13 to discuss the proposed changes. China guides banks to cap early 2024 loans, shift some forward. Bloomberg. China's central bank has reportedly urged lenders to cap the amount of new loans they issue in early 2024 and shift some forward to this year in an attempt to smooth the credit cycle. The People's Bank of China, PBOC, has guided lenders to ensure that the value of new loans issued in the first quarter does not exceed the quarterly average issued over the past 5 years. This guidance implies a limit in the first quarter of 7.9 trillion Chinese yuan, $1.1 trillion, in loans, a quarter less than the amount in the first 3 months of 2023. Hong Kong stocks jump as yuan hits 4-month high, Baidu to aid earnings outlook. South China Morning Post. Hong Kong stocks rose for a second day, with the Hang Seng Index gaining 1.1% to 17,965.08. The rise was led by Chinese technology and property developers after the People's Bank of China strengthened the yuan reference rate, lifting the currency to a 4-month high. Alibaba Group advanced 3.4%, Tencent climbed 0.8%, and search engine operator Baidu jumped 4.1%. Analysts are forecasting Baidu's earnings report today may show a 6.6% increase for the last quarter. Hong Kong Japanese restaurants lose patrons as they jet to the country on holiday. South China Morning Post. Around a third of Japanese restaurants in Hong Kong have closed this year, partly due to a drop in demand caused by the city's ban on imported seafood from Japan. High-end omakase restaurants offering expensive leave-it-to-the-chef menus with top-quality sushi were said to be hardest hit. Many opened during the COVID-19 pandemic, when people unable to travel were willing to pay more, but demand has fallen away. The cheap yen has meant more Hong Kongers are traveling to Japan and finding that they can eat well for a fraction of what they would pay in the city. Chinese law firms on the rise due to slowing economy and geopolitics. Nikkei Asia. Chinese law firms are expanding their presence beyond mainland China as geopolitical tensions and a slowing global economy force foreign competitors to scale back operations in the country. This trend reflects the growth and maturity of the Chinese legal industry over the past decade, as well as the challenges faced by international rivals that have traditionally dominated Asia. Chinese law firms are opening offices in countries such as Vietnam, Japan, Singapore, and South Korea to cater to Chinese clients who feel more comfortable working with firms that speak the same language. Meanwhile, some Chinese state-owned enterprises are switching from international law firms to domestic ones due to financial constraints and geopolitical tensions. China's yuan rises above box fix for first time since July. Bloomberg. China's yuan has strengthened beyond its daily reference exchange rate for the first time in 4 months, as the dollar weakens globally. The yuan gained 0.4% in both onshore and overseas trading, surpassing the daily currency fixing set by the People's Bank of China. The currency has been under pressure for months, but this pressure has eased in recent weeks due to the dollar's retreat and improved relations between Beijing and Washington. The PBOC raised its fixing by 0.3% to 7.1406, signaling that policymakers want the yuan to adjust to reflect market developments. This strategy has paid off as the yuan reached a 4-month high in both onshore and overseas markets. Carlyle exits China McDonald's stake with 6.7 times return. Bloomberg. Carlyle Group Incorporated is selling its stake in McDonald's Corporation's China operation for about $1.8 billion, receiving a 6.7 times return on its investment. The sale is one of Carlyle's best exits from China, and comes at a time when geopolitical tensions and a sluggish economy have made it difficult for US and European investors to put money into China. McDonald's will increase its stake in the China business to 48%, while the Chinese conglomerate CITIC Consortium will hold 52%. The restaurant chain has plans to double its locations in China to over 10,000 by 2028. Chinese property bonds, shares jump on funding support plan. Bloomberg. Chinese developers' bonds and shares rose after the authorities began drafting a list of 50 real estate firms that would be eligible for financing, adding support to the embattled property sector. The so-called white list may help alleviate fears of further contagion in China's property sector, which has been hit by funding troubles. However, J.P. Morgan Chase said it did not believe the list would prevent a company defaulting on bonds. Foreign inflows to Chinese stocks down almost 80% from August peak. Financial Times. Foreign investment in China's stock market has seen a sharp decline, with over $25 billion worth of shares being dumped by global investors despite efforts by Beijing to restore confidence. The lack of forceful policy support from Chinese leaders has caused institutional investors to hold off on buying until growth rebounds, making China's market less competitive compared to other markets in the region. Concerns over a liquidity crisis in the property sector and disappointing growth readings have also led to foreign selling of Chinese shares and a decline in the CSI 300 index. Despite some forecasts for gains in 2024, the future of China's stock market remains uncertain. U.S. crypto VC coin fund expands in Asia with first hire in Hong Kong. South China Morning Post. New York-based cryptocurrency venture capital firm Coin Fund has hired its first employee in Hong Kong and is expanding in Asia as U.S. firms face increasing regulatory scrutiny. Coin Fund, which was established 8 years ago, has a presence in Hong Kong because of the city's reputation as a reputable capital market and its importance in the evolution of the cryptocurrency industry, according to senior liquid analyst Dimitri Lapidis. Lapidis added that a lot of exchanges and crypto miners were started in Hong Kong and China. Copper M&A expands with MMG's $1.9 billion African mine deal. Bloomberg. China's MMG Limited has agreed to acquire Cuprous Capital Limited, the owner of the Coemica copper mine in Botswana, for $1.9 billion. The deal highlights the increasing focus on copper by global miners as demand for the metal rises in renewable energy and electric vehicles. Copper prices have been drifting this year, but China has been purchasing more copper as it prepares for the global energy transition. The Coemica mine is located in a promising region for copper supply, and MMG plans to expand its output from 65,000 to 130,000 tons annually. Asian stocks hit 2-month high on Wall St rally, FedView. Yahoo! Asian shares have climbed to a 2-month high, boosted by a rally on Wall Street while the dollar languished at its lowest in 2.5 months on expectations that the U.S. Federal Reserve is likely to have finished with interest rate hikes. The MSCI's broadest index of Asia-Pacific shares outside Japan was 0.91% higher at 509.82, and the index is up 7% for the month and on course for its biggest monthly gain since January. Japan's Nikkei eased 0.15% after hitting its highest level since 1990 on Monday. Instagram famous Choi Hung Estate's fate demands new approach. SCMP opinion. The Choi Hung Estate in Hong Kong is due for redevelopment, but according to an op-ed in the South China Morning Post, the government needs to reconsider its approach to redevelopment in order to preserve the uniqueness of the city. The estate, known for its colorful outer walls and Bauhaus-style architecture, is an important part of Hong Kong's history and culture. The article argues that redevelopment should not just be about increasing residential units and improving quality of life, but should also focus on preserving historical and cultural landmarks. Hong Kong basketball players left with hefty medical bills by city officials. South China Morning Post. Hong Kong basketball players are facing financial burdens due to inadequate insurance coverage for international events. Players are left with hefty medical bills for injuries sustained while representing the city. The Hong Kong Basketball Association purchased insurance that only covers up to 10,000 Hong Kong dollars per claim, leaving players to cover the rest of the expenses. Players have expressed frustration and worry over the lack of support from the association. The association has faced other controversial issues in recent years, including abandoning pre-qualifiers and making decisions without consulting players. From 72 hours to 30 days, for visa-free ways to visit China by land, sea, and air. South China Morning Post. China has reopened its borders and implemented several visa-free schemes to attract tourists from dozens of countries. Transit passengers from 54 nations can stay in mainland China for 3 to 6 days, while visitors from 59 countries can enter Hainan province for 30 days. Additionally, tour groups from Hong Kong or Macau can enter Guangdong province for 6 days, and cruise ship passengers can stay in China for 15 days. These visa-free schemes aim to stimulate tourism and boost the Chinese economy after years of the pandemic's impact. Ladies and gentlemen, I am Dr. Six, your resident observer from the 6 Degrees world, bringing you the latest news from around the globe. Let's dive into today's highlights. First up, Dalian Wanda Group's unit, Wanda Properties International, has proposed extending the maturity date of a dollar bond, giving them more time to meet their financial obligations. It seems they're trying to buy themselves some time and avoid any immediate financial stress. In China, the central bank has urged lenders to cap early 2024 loans and shift some forward to this year. This move aims to smooth out the credit cycle and ensure stability in the financial system. It's like pushing the snooze button on the loan market, giving it a little more time to catch its breath. Moving on to Hong Kong, stocks jumped as the yuan hit a 4-month high. This positive development, along with Baidu's positive earnings outlook, boosted investor confidence. It's always nice to see the Hang Seng Index rise and put a smile on investors' faces. Meanwhile, Japanese restaurants in Hong Kong are facing a tough time due to a drop in demand caused by the ban on imported seafood from Japan. It seems Hong Kongers are trading their sushi dinners for a trip to Japan, where they can eat well for a fraction of the price. Who can blame them? A cheap yen and delicious food sounds like a win-win. In the legal world, Chinese law firms are on the rise, expanding their presence beyond mainland China. Geopolitical tensions and a slowing global economy have forced foreign competitors to scale back their operations in China, creating an opportunity for domestic firms to step up. It's a classic case of when one door closes, another opens. Speaking of China, the yuan has risen above its daily reference exchange rate for the first time in 4 months. This is a positive sign for the currency, indicating that market developments are aligning with policymakers' intentions. It's like the yuan saying, "Hey, I can do it too." Carlyle Group Incorporated is making a successful exit from its investment in McDonald's China operation, reaping a handsome return on its investment. It's always satisfying when things work out well. This deal shows that, despite geopolitical tensions and economic challenges, there are still opportunities for investors in China. Chinese developers' bonds and shares have risen after authorities drafted a list of eligible real estate firms for financing. This move aims to support the embattled property sector and alleviate fears of further contagion. It's like giving the sector a helping hand, saying, "We've got your back." However, foreign investment in China's stock market has seen a sharp decline, with global investors dumping over $25 billion worth of shares. It seems concerns over a liquidity crisis in the property sector and disappointing growth readings have dampened foreign investors' enthusiasm. China's market needs a little more love to keep up with the competition. In the world of cryptocurrency, CoinFund is expanding its presence in Asia, hiring its first employee in Hong Kong. As U.S. firms face increasing regulatory scrutiny, CoinFund is looking to tap into Hong Kong's reputation as a reputable capital market and its importance in the evolution of the cryptocurrency industry. It's like setting up shop in the heart of the action. Moving on to the commodities market, MMG Limited is acquiring Cuprous Capital Limited, the owner of the Coemica copper mine in Botswana. As demand for copper rises in renewable energy and electric vehicles, global miners are focusing more on this metal. It seems everyone wants a piece of the copper pie. In the financial world, Asian shares have climbed to a 2-month high, fueled by a rally on Wall Street and expectations that the U.S. Federal Reserve is done with interest rate hikes. It's like a mini celebration in the markets, with investors feeling optimistic about the future. Now, let's take a moment to discuss the fate of the iconic Choi Hung estate in Hong Kong. As the estate faces redevelopment, it's important to consider preserving its historical and cultural significance. Redevelopment shouldn't just be about increasing residential units, it should also focus on preserving landmarks that make a city unique. Let's keep the colors shining. Next, we have a story about Hong Kong basketball players facing financial burdens due to inadequate insurance coverage. Representing the city comes with its risks, and players shouldn't be left with hefty medical bills. It's time for the Hong Kong Basketball Association to step up and provide better support for its athletes. China has reopened its borders and implemented several visa-free schemes to attract tourists. From transit passengers to tour groups, these schemes aim to stimulate tourism and boost the Chinese economy. It's like rolling out the red carpet and saying, "Welcome back, travelers." And finally, Asian shares and the MSCI's broadest index have reached a 2-month high, while the dollar languishes at its lowest level in 2.5 months. With expectations that the U.S. Federal Reserve is done with interest rate hikes, investors are feeling buoyant. It's like a happy dance in the markets. That's all for today's news. Now, it's time for you, my dear viewers, to join the conversation. What are your thoughts on these stories? Do you have any questions or opinions? I'm all ears. Remember, in the 6 Degrees world, no topic is off limits. Let's dive in and explore together. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.